We're speaking with a former national news anchor and business chair for a national news outlet. And he has since gone off on his own and become a freelance entrepreneur. So we're going to see what kind of lessons you can learn from a person who's going off on his own to become an entrepreneur, and the things that he has learned from the way business works, the way business thinks, and the way you should be thinking as an investor, especially with regard to the role of artificial intelligence. You will not want to miss this.
This is Make Better Wealth Decisions, a podcast dedicated to helping pre-retirees and retirees manage risk and economic uncertainty by adopting a pension-style approach to improve your risk-return trade-off. I'm your host, John DeGuy, a portfolio manager with Design Securities in Toronto.
This week, we're speaking with Jon Erlichman. He is the host of Ticker Take with Jon Erlichman on YouTube. He is an experienced TV news anchor, interviewer, and correspondent. So this time I get to turn the tables on him and I get to ask him some questions. How are you, Jon?
John, I am very excited. I'm a little bit nervous, so go easy on me, but this will be fun. I appreciate you having me on.
Yeah, well, it's a pleasure. And I think that's one of those fun things because both you and I have done some live interviews in the past, but it is fun when I actually get a chance to turn the tables once in a while. So I want to begin by asking you about your life as a freelance entrepreneur. How is that going?
Oh my goodness. Well, it's been amazing and exhausting in the same breath. It's funny. We get to talk to, I did at least in my many years as an anchor, to so many different entrepreneurs. It's not my first go round as an entrepreneur, but you're reminded once you're back in the hot seat, just how fun and tiring it can be at the same time. But we're having a great time. It's been a really important moment in media. And, I started thinking a few years ago about the desire to think differently about how we create content. Everybody's consuming it differently. It's going in new directions. I'm thankful that we have found an audience. I'm thankful that we have found great partners. I still do work with Bell Media, where I worked at B&M Bloomberg for many years, and they've been distributing Ticker Take as well. So far, so good. But, listen, I'm not going to sugarcoat that entrepreneurial life is, a breeze or a perfect surf of a wave. There's ups, there's downs, and everything in between. But I really think that at this particular moment, it does help if you're willing to jump out there and try something different. There are so many business models that are getting a shakeup right now, whether it's because of AI or anything else, that if there was a moment to embrace that entrepreneurial dream that you might have, this is a pretty good time to try.
What would you say would be the biggest lesson you've learned as a result of jumping in and being an entrepreneur on your own?
Well, it's funny. Like I always wanted to be able to open more doors by being on my own, to sort of explore those avenues that, maybe you didn't feel like you had as much leeway or flexibility to do if you're working for one company and you have one particular job. Of course, in this world, you open the door and you can run everywhere. You can go this way, you can go that way. So I think what happens is you have plenty of opportunity, and you quickly learn that there is value in picking a lane. I know there's that famous quote from Steve Jobs, focus is about saying no. There's a certain truth to that. There's another great quote actually from Jeff Bezos. The idea that you should be stubborn on your vision, but flexible on the details. And that one really resonates with me because I feel like, if I think about what I'm doing on a day-to-day basis, we create media content. We create content in partnership with some of our great sponsors. We are, working on some very important partnerships, whether it's with Bell Media or the New York Stock Exchange. So there's a lot of different aspects of what you have to navigate. And within each of those relationships, I think you really have to have a little bit of flexibility. And when it comes to content in 2026, oh my goodness, you have to be willing to embrace that certain styles of content work somewhere, they work better somewhere else, and everything in between. So you have to be flexible, you have to be nimble, whether it's with the actual products you're making or everything behind the scenes and in putting that all together. But you do still have to have that bigger picture focus. And, I run this business with my wonderful wife, Caroline. And so, we do try to, when we're not running around as entrepreneurs, take those moments to think about the bigger picture, constantly come back to the table on what our strategy and vision ultimately is. And that part is very helpful too. So again, exciting, tiring, everything in between, Jon.
It's funny because it's a joy following you on social media. When I look at your feed on X, there's a lot of things where you'll say, this is the 25th anniversary of this company being launched, or this IPO, or this famous thing. And it's funny because one of the things that I find with your perspective and keeping things fresh is that you tend to be good at reminding people about the history of how capital markets have evolved, sometimes a little bit of funky sort of pop culture, but mostly it's just what's going on with regard to the world outside. And I think that perspective is useful. So thank you as you do that, because I think that's an important thing to do.
Well, I appreciate that. Look, I put quite a bit of work into all the content that I share in the world. And, I think social media is now at a place where it is a full-time business for a lot of people. It used to be, maybe that it was a hobby for this person or that person. And that was really sort of the first generation of social media users. But, I'm part of the creator economy along with, arguably millions of other people now. So I do think long and hard about that. Exactly. You too. And so I do care a lot about the messaging that I'm putting out, how the audience is receiving that. I will share a little story on just how my own evolution as someone covering the financial markets. Media coverage of the markets is diverse. There's a lot of different ways for you to approach a story or a stock. But I found over the years a growing disconnect between how the media was covering one aspect of, let's say, a company or even an economy in a single moment in time, and what would sort of translate into valuable information for an investor. And what I mean by that is the media cannot help themselves but to get really fired up about something that's happening in the moment, whether that's an earnings miss and a stock that seems to be under pressure and, this feeling of a crisis moment inside of a company. And, as a member of the media, we were always approaching that with a certain amount of discipline in what we said. We weren't certainly trying to sort of run rhetoric into the streets. But the thing about investing, which you know a lot more about than I do, is that a lot of the benefits to investors over the long term come from being calm in those chaotic moments and keeping your eye on the future. And so this just became an increasing disconnect for me as somebody talking about the markets. And so when I talk about, something that happened a long time ago that might have seemed small or big at the moment, and you look at it 20 years later, 10 years later, whatever it may be, and say, wow, that was the wrong take, or wow, that was small-minded thinking. That's a little bit of what I'm going for. And we can take any headline from today and probably find a similar lens to think about. This is the conversation today. What on earth do you think people will think about the conversation we're having today, 10 years ago on this subject or that subject?
It's funny because for the people listening, people may or may not know Jon's background, but prior to starting Ticker Take, he spent 8 years as the chief business correspondent for CTV. He spent many years working at BNN, and I was actually a guest on BNN's Market Call, I think, for maybe 50 shows. And over the years, this disconnect that you're talking about is something that I actually experienced some time ago, was that It's exactly as you said it perfectly. We tell people in the financial services industry tell their clients to take a long-term view. But when you're live on national TV and people say, what's your view on this? They want to know it for today and this quarter. And even when you're held to account, the longest time horizon is, well, this is what you said a year ago when you were on the show. And this is how these picks performed over the past year. And that's good or bad. You have to do something, but I found it frustrating because I'm trying to tell people that, well, no, time horizons are measured in decades and generations, not in 1 year. But the media has a role to play, and it is very difficult, I think, to find a way to have the balance to talk about best practices, first principles, while at the same time being newsworthy. And because you can't say the same thing all day, every day for years on end. Like, you have to have a story as well. So thank you for that. I think that's useful. I will pivot to ask you about AI, because these days everyone is talking about AI, and my hair is a lot grayer than yours, and so I'm not as willing or able maybe to adapt to AI as some people are doing. I'm wondering about what your take is. What is your take at a high level about the way AI is transforming the investing community, but also the business community in terms of the way people produce whatever it is they produce, whatever goods or services they're in the market for?
Well, I guess the full disclosure, John, is that I'm very bullish on the AI era.
Okay.
That's not to say that I don't share a lot of the concerns that many people have about the disruptive nature of AI, the uncertainty surrounding it. And I had a conversation with the noted AI expert, Jeffrey Hinton, a few years ago. And he predicted the scenario that we are in now. At the time, this is only a couple of years ago, but he was trying to figure out what would be the global solution for just slowing things down on the AI front, just to make sure we feel like we know what we're getting into a little bit better before we jump in. And his only logical conclusion at that point was that governments around the world would have to get together and come up with logical policy and regulation in its infancy that could sort of translate into parallel policy around the world. He could not think of any other way to kind of slow things down before we get into all sorts of, wacky situations. He said, if ultimately it's left in the hands of private companies, what do private companies do? They compete. And then we're giving private companies a lot of runway to then put AI into a position where it's competing against other AI. What's going to net out on the other side of that? These are things that Jeffrey Hinton was saying a couple of years ago, and they feel very relevant to what's happening today, where you look at this sort of land grab that's playing out in the investing world. But I think there's lots of examples right now that we can point to where you could look at it as a moment of uncertainty, or you could look at it as just a moment that is influenced by technology. I'll give you an example. So, you've got these big battles between AI players like OpenAI, Anthropic. Anthropic, early in the month of May 2026, decided that they would have this big announcement about putting all these new AI tools in the hands of big Wall Street firms. They had a big splashy announcement. Jamie Dimon, the head of JP Morgan, was there for the announcement. He said he's been using these tools. They're terrific. But those tools are essentially a replacement at the end of the day for people. The most commonly cited example in that case was, let's say you're an analyst working at a financial firm under a senior analyst. There's sort of a bevy of things that AI can do better than a human. And so what's that going to mean for that person? Now, Jamie Dimon said at the end of the day, we're not looking to get rid of people in our workforce. We're looking to find the best places for them to be in our company. But I do think there's a bit of innovator's dilemma that's going on right now. You have tools that should make companies productive, more efficient. Why not use them? It does lead to sort of this awkward, hard choice on what that means for humans. But it should enable at least some companies to be more efficient. But that story alone kind of ties into the broader narrative around how AI is disrupting all sorts of industries. So in that case, AI is very quickly rippling through an industry and changing the way those companies work. In that case, it's financial services. But the financial services industry would have, just as an example, relied very heavily on the software industry to do some of that work over the last few decades. And I think we've already seen this year as an example.
Yeah, software down.
Exactly.
Yeah.
At least a certain layer of software, the one that involves a company saying, hey, like you'll pay per user for this great layer of software that makes your life easier. And all of a sudden, those high per user prices just aren't appealing to the enterprise anymore. And there's that part. The other interesting part is, okay, so the traditional software model gets disrupted by AI. Traditional businesses implement AI into their business and it disrupts their own industry. AI still relies on a lot of inputs. And that's why I'll sort of close the loop on this financial services example. You've got companies like S&P, Morningstar, FactSet, these companies that have great data sets that have actually been the lifeblood of us being able to have these conversations about the markets, tracking what's going on. That data can't go away. Companies do a great job of creating that data on behalf of investors around the world. And the JP Morgans of the world aren't going to do away with that data. But when Anthropic had that announcement early May, a lot of those stocks took a big hit because people were worried about their business the same way they're worried about some of those software businesses. Since then, there was a bit of a recovery. And I think the net conclusion there was the data will still be used by the AI or the AI agent that has replaced that junior analyst. But because the AI agents can do more with that data than the old model of having one person who, a company pays for usage of data with one analyst, one portfolio manager, one financial advisor. I think that the bigger firms are starting to say, we're not going to pay for the data the way we used to. We still need the data, but we're going to pay for it differently. So the net takeaway with that example is the business model changes. So you're kind of left with just one announcement. This is just one announcement from Anthropic, and it tells you about all the different changes that are happening in multiple industries simultaneously. I just look at that as change at a rapid clip. There's always change. It's just happening very fast. But I think in the end, I'm still a bull on this AI story, even though it is a complicated one.
Okay, so I can tell you a story about something that I just experienced this morning. So the firm that I'm at, Design Securities, is a small but fast-growing firm, and I'm on the advisory board that gives input. There's about 7 of us that give advice to the senior management team as to where we're going, what we're doing, what we can do differently. So we just had a board meeting earlier today, and we were talking about the use of AI. We're a fast-growing company. Design is actually now managing 10 times as much money as it was 3 years ago. So it's growing very, very quickly. And as a result, we have to hire new staff to support. Well, guess what? When you talk about the Jamie Dimons of the world and the impact that the major firms have, they are sometimes letting people go in right sizing by using AI. We're actually growing, but we're growing not as quickly as you would think in terms of the human resources, because we're actually constantly rejigging the org chart to see who can use AI and then you just have someone who's better at using AI. You don't have to hire as many people. You're still very effective. You're still very efficient, but you're constantly thinking about, okay, well, is there a better way of delivering a similar experience with the same quality control, but less human interaction? So it's just another way of looking at things. And everything you say, I think is fair, and I agree with all of it. But I just wanted to give you another perspective of what that might mean in the financial services industry, because I think it's another example that actually works based on your fact set.
Yeah, I like that one a lot, and that's helpful. And I will say, sort of in new media or the creator economy or whatever you want to call this world that I swim pretty deeply in. If you think about it, you know, in the next year alone, the amount of AI integration into the process of making content will be so sizable that I really don't want to predict how these businesses will look and feel, beyond the next 12 months. I mean, I'll just give you an example. Like you've got AI editing tools, AI editing the videos, the ability for people to maximize the content they are creating using AI. You're sort of getting into a situation where, on the one hand, literally individual people can start creating their own truly media businesses, right? There's already been the story of the sort of the single entrepreneur building the billion-dollar business with no employees and just agents. And so in media creation, I think, we're thinking about that too. I guess the total flip side to this is that as we're sort of figuring out what our human role will be in these new enterprises, those are jobs that are just starting to emerge, whether that's sort of it's like you're on the horseback and you're riding the horse and the horse is the AI and, we're all just AI cowboys or something like that. I don't really know what the job will look like, but I still think there are jobs that are taking shape. So we'll be able to move into them, have no fear. But also, I do feel strongly that our need for human connection will also increase in time as well, especially in a world where two things can happen. Either the world is just moving way too fast for our, beautiful but smaller brains, or, in a world where you might have more time than you used to. It's not the worst thing to be able to sort of make more time for yourself. But I think people want to work hard. People are used to working hard. And so I'm still very excited about where the world goes from here, but it's a fascinating time.
It's funny because one of the questions that comes up, and this comes up in all manner of things. My wife is a lawyer. It's laws being impacted, or lots of fields, especially the professions that are threatened by AI. And what you said a moment ago is so true. Human interaction is still very much part and parcel with the way people receive advice in all its forms. And when people say, well, an AI is going to take your job, in fact, I don't think that's exactly fair. I think that the future is cyborg. It's not like AI will replace people who give advice, but people who will give advice will have to be using AI as part of the delivery mechanism, as part of the value proposition. It's not like they can be silos. They will be working together in concert, because I think empathy and the ability to relate is the sort of thing that is a uniquely human characteristic and attribute that I don't think AI is quite likely ever to replace it entirely, and certainly not for people of my generation. Maybe young folks like you, John, but not so much for me. Okay, so we're running short on time. Let's see if we can wrap this up. The podcast is called Make Better Wealth Decisions. And if it was up to you, John, what advice would you give to the listeners to help them make better wealth decisions?
That's a great question, John. Well, when I launched TickerTag, I launched it to address two questions that I most frequently got from people. One was, people can't help themselves but be curious about what to invest in. I understand that one, but I got the same amount, if not more, questions from around the world about how do I get started as an investor. And so I think what that has reminded me, and I know you guys appreciate this and live by this in your business, understanding who you are first and foremost is paramount when it comes to making money decisions. Because it even just sitting down and thinking about who you are, where you want to be, what are the important things to you, a lot of things start to get easier after that point, because it allows you to think about, where you have to prioritize on money issues just based on how comfortable you are with different things, including how much risk to be taking in your life. And on the investing piece in particular, I think it's really going to help you to make better determinations on the kinds of things you want to invest in. This is something that people like you have been preaching for years, but somehow it's not always top of mind in the day's headlines of the stock market. And it's very easy, if you don't have that lens or compass working on your behalf, to get caught up and be worried about the market selling off, or to be worried about missing out on this IPO or that. So I do think that would be the number one thing I would say is take a look in the mirror, think about everything that matters in your life and where you want to be going and what you're responsible for. Then try to work backwards and work money into that. And then after you've done that, work the investing lens into it. And I think things start to get a little easier.
That's been a really refreshing take on things. That's not a common answer. And I think it's an excellent answer. So I want to thank you for your time. And I want to thank you for your time today, Jon. It was a real pleasure.
Likewise, Jon. Thanks so much for having me. Appreciate it.
If you're worried about the current investment climate in your money, go to my website to book a call for personalized advice to assist you in feeling secure and protected about your retirement.